Hello and welcome to video 3 of your training. In this video I just want to cover short trades, and I'm going to give you some real examples of short trades. We're going to go through the rules and then walk through some real examples using the MetaTrader platform. So let's just begin with the rules for short trades. We need two different criteria to be met to enter a trade with this system. The first thing we're going to look for, we want the price to close below the EMA 60. And when you're starting with this system, you should be trading the daily charts, as I said in the last video. So if you don't already have a daily chart, you should open one now. And on that daily chart, we want the price to close below EMA 60. That's our first criteria. And then our second criteria is that the CCI value is lower than minus 100. If both those criteria are met, we can then enter the trade. And when we're entering a short trade, we're going to enter with two lots or multiples of two, which I'll talk about in video 5, but for now let's just say two lots. And we're going to set a stop loss to protect ourselves from bigger losses. We're going to use one of two rules to set our stop loss. We're either going to set it just above the EMA 60, or we're going to set it 200 pips above the entry point. In a faster moving market, you would probably use the 200 pip rule. Most of the time, you'll probably set it just above the EMA 60. I would set it 20 pips back or something from the EMA 60 and use that. And we're going to use whichever stop risks less money. So in a faster moving market where the EMA 60 was 300 pips away from the entry point, you don't want a pip or a stop that big. You would use the 200 pip rule. Any other time you're going to set it just above the EMA 60. And then once you're in the trade, we have two lots in when we enter. We're going to exit the first trade at 200 pips profit. So the first lot gets taken out when we reach 200 pips profit. The easiest way, of course, to do that is to set a take profit level of 200 pips on your first lot traded. And then for the second lot, once this first lot is taken out, we're going to set our stop loss to 0. And then we're going to trail our stop at 200 pips for the second lot. If your trading software doesn't allow you to trail your stops, just move the stop 200 pips ahead every time the trade moves 200 pips in your favor. So for example, once you were 200 pips ahead in the trade, your first step would be to move your stop loss to the break-even point. And then once you were 400 pips ahead in the trade, you would move it 200 pips more in your favor. Of course, the easiest way to do it is to use a trading platform that allows you to use trailing stops. Okay, with the rules out of the way, let's talk about some examples. I'm going to go through an example in the presentation here, and then I'm going to show you some real examples on the MetaTrader platform itself. So first of all, we have a little chart window here. We're looking at the part that I've highlighted in the screenshot. We need two criteria to be met. The price must close below the EMA 60. So looking here, here's our EMA 60. And this is a daily chart, and the price has closed below the EMA 60. So our first criteria is then met. We then look at the CCI value at that same point in time. So following our little red arrow all the way down here, there's our minus 100 level right there. And the CCI value is lower than minus 100. So that's our criteria met. We can now enter the trade. We're going to enter the trade with two lots. So we're going to go short with two lots. In this case, here's our entry point. We entered the trade with two lots, and we set our stop loss at either 200 pips back of the entry point or just above the EMA 60, whichever risks less. You're going to choose the one that risks less. In this case, it was only about 60 pips back to the EMA, and I set my stop loss about 20 pips behind that, so I'm using a stop loss of about 80 pips on this particular example. And then once you're in the trade, you're going to take profit on the first lot at 200 pips. So assuming that the trade goes in your favor, and hopefully it does, the trade is going to go in your favor, and you're going to set a take profit level on one lot at 200 pips. And when that lot gets taken out, when you get your first lot taken out and it's profitable, we're going to set the stop for the second lot to the break-even point. So you would move this line up here and set your stop at 0. Or at the entry point for your second lot that you've left in the trade. And then you would trail your stop at 200 pips. So set your stop to trail at 200 pips and then just let the trade go. In this case, it continued on down to here, and then it came back up, and at that point our trailing stop had been dragged down and we stopped out. So let's take a look at a couple of real examples on the MetaTrader platform just to show this a little bit further and get you knowing how to really use this system well. Okay, so looking here at our first short trade or sell trade example, I'm looking at the Euro US dollar on a daily chart, and I'm looking on January 18th of 2010. There was a nice entry signal here. It actually might have been a couple days before that. Looking at this, the 15th of January, I believe, is when this trade occurred. And taking a look here, we need to meet two criteria. First of all, we need the price point to be, the daily close to be below the EMA 60, and in this case it has been for a few weeks, or about a week actually. And then looking down below, we need the price point, or the CCI, to be below the minus 100 level, and that did happen just after January 18th. The minus 100 level is the line below the center line here, so it closed below, the CCI was below minus 100 at about this point here. So if we were to enter this trade, we would have entered at about 1.4380 for the price level. We would enter with two lots. We would sell two lots and we would enter them separately. We would set our stop loss on the both lots according to one of the two criteria we laid out before. We either set it 200 pips back or just above the EMA 60, whichever risks less. In this case, looking at it from here, you would probably set a stop loss at about 1.4535, which is just above the EMA 60. So that gives you a 155 pip stop, so you're risking less than 200, and that's what you would use on this trade. So just to lay this out here, we're going to enter at 1.4380, or approximately that. My line isn't quite on there. And we're going to set our stop loss at 1.4535, just above the EMA 60 at the point where we're entering our trade. Going up from here, we're just above the EMA 60. And we're going to set the take profit level on our first lot 200 pips ahead. So in this case, that would be at about 1.4180, about this level right there. And then we let our trade ride like that. The trade's either going to move against us or for us. In this case, it moved in our favor. And our first lot was exited at 1.4180, would have been the level, those 200 pips ahead. At that point, we would set our stop loss for the second lot to the break-even point. So we would move our stop loss on the lot that we still have in the trade to the break-even point, and we would set that to be a trailing stop at 200 pips behind. And when you did that, you would have stayed in this trade for about a month, and then it would have exited on the 15th of February or around there, at which point you would have stopped out. It got brought down to here, and then you would have stopped out here at a 200 stop split there, and you would have stopped out at about 1.3780. So about a 600 pip trade in about 3 weeks time actually. So a nice profitable trade example. And just to give you a good example of how to use this system, let's take a look at one more example. And just taking another example here, I'm using the US dollar Swiss franc daily chart for this one. And taking a look here, we need to first establish that our criteria has been met. And our criteria for a short trade is that the price has closed below the EMA 60. So in this case it has. And then the next criteria we need to meet is that the CCI indicator is below the minus 100 level. And again, that happened at this point here. So this trade we entered at 1.3255, and we'd set a stop loss when we entered the trade. We entered with two lots, and we set the stop loss for both lots either 200 pips behind or just above the EMA 60. In this case, it happened to be about the same point. So taking a look here, we set our stop loss 200 pips back at 1.3455, and we set the take profit level on our first lot to 1.3055. So 200 pips ahead, that's the take profit on our first lot. And we then let the trade run, and it's either going to move for or against us. In this case, it moved for us. And our first lot was taking out at 1.3055, so 200 pips profit on that lot. When that happened, we moved our stop loss from the here to the break-even point at 1.3255 for the second lot, and we let the second lot run in the trade, and we trailed our stop at 200 pips. And in this case, it continued on, and it continued way down, dipped below the 2210 level, and then moved back up, and we stopped out at 1.2339. So this trade ended up, we made 916 pips on the second lot. We made 200 pips on the first lot, so about 1,116 pips on the trade total. Another very profitable trade and another excellent example of how to use this system to profit. So now that you understand how to make a short trade with this trading system, you should move on to video 4 and watch the examples for long trades. The rules are largely the same except reversed, but you should watch the video anyway. And once you've done that, then start to practice making short and long trades on MetaTrader. The more you practice, the better you're going to be at using this system, and the easier it's going to be for you to earn big profits over time.